Hey guys, it's Carter. Welcome back to the channel. Now in today's video, we are going to be answering one of the most common questions that the stock market is facing right now is how does a government shutdown affect the stock market? Will it make it get buying pressure where a lot of investors are hopeful for the future, or does this cause fear and panic where we could get a possible crash or recession? So I hope you guys enjoy it. Smash that like button, subscribe. But if you want to learn more about investing and trading, check out our school. It's awesome. I'll put a link to it down below, and let's dive into this. So I think we all know that right now the government is shut down, right? So what does this mean for the stock market? Well, actually, we really haven't seen a lot of sell-off nor buying pressure. The market honestly has just been relatively flat, which is kind of expected. But one of the things that investors hate is uncertainty. So sometimes a government shutdown could signal, a political gridlock, which can cause traders and investors to pull back until there's clarity, right? Why would you want to invest into the unknown? This could usually mean to short-term volatility. So short-term swings going up and down, right? So another thing you also have to take into consideration is there is hundreds of thousands of federal employees right now that may not be getting paid. So this could reduce consumer spending. This could hurt certain sectors like retail, travel, and restaurants. But more importantly, for like the average investor, right? Like you and I, the retail investors, one of the things that I always love to look at is going to be like economic data reports. So, reports from the Labor Department, the, Commerce Department may be delayed, and traders rely on this to make informed decisions. So missing reports or delayed reports could add to the market uncertainty. Another thing we could see is impact by sector. So, think of the defense contractors. Lockheed Martin may see delays in government payments, right? Because if the government shut down, how are they going to pay their contractors, right? We also could see consumer sectors could dip to reduce spending by government workers, like I mentioned, and treasury and bonds might see movement if investors flock to a safe haven assets. So those historically are more of a safer way to invest. But the last and final thing I want to talk about is history, right? We've seen this time and time again. Like in 2013, 2018, 2019, we had a limited long-term impact on the stock market, right? So all those times we've seen the government shutdown, it usually, the market bounces back relatively quick when the government reopens. So big picture, a government shutdown usually causes short-term volatility, but honestly, no major long-term impact. So for those investors that are just sitting on the sidelines, whether they don't know, should they invest, should they not? For me, I always think it's good to have time in the market rather than trying to time the market. And so for me, this honestly is not that big of a deal. And if we do get a dip down, guess what I'm doing? I'm going to be buying those dips. So guys, hope you guys enjoyed it. Like, follow, and we'll see you guys in the next one. Take care.